Hi, I'm Phil Anderson and welcome to my channel. I've been a property investor now for over 30 years and I've watched investors continue to make the same common investment mistakes. There's so many dirty tricks in the real estate industry and it's all caught up in a whole heap of sales hype. I want to cut through that sales hype and help investors avoid the common mistakes. I hope you enjoy the following content, but please remember to like and subscribe. Welcome listeners and viewers around the country. Unfortunately, the real estate industry has done a great job really of empowering the sellers, but a pretty poor job of empowering and protecting the buyers. That usually leaves most real estate investors feeling overwhelmed, particularly when what they're getting as advice is usually self-serving sales advice, leaving most investors feeling torn between the need to build wealth and also the need to protect their pocket. Now, I feel pretty strongly that every hard-working Australian deserves to retire much more comfortably than requiring a pension to live off. So I hate seeing people sitting on the sidelines, through a fear of how they're going to get into the market safely and effectively. Someone had to step up and protect investors. I've been a property investor for now 30 years, and in the last 15 years, I've been helping 1,000 property investors. I'm the captain of a little team of independent property investors, driven through the knowledge, I gained through property investing at a young age, being able to retire at 38 years of age, but working with those 1,000 investors, we've been able to use thousands of transactions to come up with a proven checklist, a proven strategy to screen the national property markets, but also screen the professionals inside of the national property markets as well, to be able to certify not just the properties, but the professionals that investors can trust and will become very empowered when they work with those particular certified professionals. Today I'm joined by a couple of those professionals and we're going to cover, some cool stuff. One of the key, parts of the puzzle that we're going to solve today is how do you pay the right price every time. I'm looking forward to covering that with you guys. We're also going to cross over to the streets and talk to one of the certified agents in one of the hottest locations in Australia today. It's going to be a great catch-up. I'm a big fan of some of these markets that we're now seeing move very quickly in the Australian property markets. And we're going to answer a few questions from last week, and please, if you're listening, feel free to put in the comment section questions. We'll try to answer at least a few on the podcast each week, but we'll also try to come back to you with questions, in various ways outside of the podcast as well. Thanks for joining me, guys. I'm joined by Trent Durrington. Trent is known and trusted in the field of protecting investors through the screening of developers and all facets to do with contracts and so forth. Thanks for joining me today, Trent.
Good on you, Phil. Good to be here, mate. G'day, Gordy.
G'day, Trent.
Gordon Ruddy. Gordon has been a long-time friend and associate and helped me out over the years many, many times. He built one of my first house he built, yeah. And he's obviously pretty well known to a lot of people as one of the leading property advisors, property investment advisors. So thanks for joining me, boys. I've got a topic. I want to jump a little bit into something that's of interest to me just at the moment because, as you know, I've just gotten back from Byron Bay last night and I was on a walk and took the family and friends for a walk through a beautiful rainforest resort we were staying in, and you may be familiar with it. I know you are, Trent, the Byron at Byron.
Yeah, lovely spot.
Lovely spot,
fantastic.
Yeah.
Yeah.
43 acres or something, right on, pretty much the heart of Byron Bay. And as we were walking through the boardwalk, we noticed a sign that was the original owners of the land, and that land, well, maybe not the original owners, but previous owners of the land, and the previous owners of the land had purchased that land in early 1970s, and they'd paid $1,000 for that 43 acres. Now, the people I was on the walk with, they were just blown away, and that started the conversation about will property prices continue to go up? And I was really surprised at the passion that one of the people on that walk with me kind of was defending the fact that properties won't continue to go up. They just can't. They can't continue to go up. Now, I've got some great references to that, but I thought I'd throw that to you guys. Have you seen this yourself, mate? Have you had that reference? What would your observations be?
Well, apart from personal experiences, watching land from, I mentioned last week, I bought my first property at 18, which was back in 93. And watching that particular property, is 3 acres, a lot of that growth happened in the last 20% of the cycle. And that being introduced to property at that point, it was an eye-opener to me. So that was really my first experience, and then from there just watching the property cycles. But walking the dirt and taking people to new greenfield land estates and master plan communities, which in the early stages feel like they're, you're packing a lunch to get to go and drive and walk the dirt in these estates, and you can see some people's reactions, like looking around going, where are we going, And then soon after, 12 months to 2 years later, you drive back, take them back out there, and wow, there's the Coles, the Woolies, the McDonald's. A master plan has been developed and built. Communities all of a sudden from a new estate has now got 1,000 families living in that estate.
New schools.
Yeah.
We're seeing subdivisions that have got, like one we know has got like 6 or 8 schools planned to go in the subdivision.
Yeah,
that's how big they are.
Well, I've just thought of another really good example is 2000 going to 2001, the Springfield development. If we talk about some real numbers there now, so going to 2001, you had to get in a 4-wheel drive and to do a tour down to the lake, down to where the sales office and saying this is where stage 1, So you're talking 22 years, and to think where that is now, off the top of my head, the amount of people that lived out in that Springfield corridor, it's thousands and thousands, hundreds of thousands of people. So within that short period, again, a 600 square metre lot on living on the lake there was less than 100,000. Might have been right on 100,000,
Wow.
So, that's more than tripled, if not quadrupled, the price in small 20 years,
Yeah, that's crazy.
So I see those examples all the time.
Yeah.
I only did a property run on Tuesday, and it's the same thing. I can always relate to just prices growing, and populations in the urban sprawl.
Yeah.
It's sometimes it's easy to forget, but it happens.
Yeah.
Continues to happen.
It does, eh?
Yeah.
And how about you, Gordy? You work with people all the time. You must hear people say, but, property can't continue to go up in price. Got any references you can think of?
You hear it all the time, all the time. Think back over the years, it's just a recurring, it's like a record. It goes round. People say, it can't, property prices can't move, but they do. They just keep moving. As you're talking, I'm thinking of particular examples. Back in, 1991, I built a home that I lived in, and then I moved away from that particular town. And at the time, my brother said, I'm looking for an investment property. So he ended up buying it from me. That was in 1991. And then it was 2000. And he said, nothing's happened.
So 9 years later?
9 years later. Like when he first bought it, the rent must have been like $150 a week. But in 10 years, the rent had grown to, I think, $275 a week. So massively cash flow positive, but property prices in that area hadn't really moved. And he said, no, I think I'm going to sell it. I said, don't sell it. Don't sell it. It's going to move. And so he sold it. I think he sold it for basically what he paid for it. It might have been $5,000 more. He covered all his costs. Didn't lose any money, but he didn't really make any money. And I remember within 12 months, it had moved $50,000. But then the next 12 months after that, it had actually doubled from what he sold it for.
Oh, gosh.
And I went, I wish you hadn't have done that. And,
so what period was that, Gordy? What was that?
So
10-year
that was
period, was it?
That was a 10-year period. So we kind of think the cycles go in 10, but sometimes the market does what the market does, but it moves. It does its own thing when it's ready to do it, and sometimes it's not in the time we want it to do, but we just got to be patient and have it's a saying many people do. It's not so much about timing the market, but time in the market. Many of the listeners have probably heard that before, and it's so true. So I remember in that same time period where my brother had that property, I bought another one, and it wasn't a big property. We bought an investment property, and we paid, I think it was $99,000 for this property in 1999. I thought, wow. And then it was the next year later, and my brother sold his, and then 6 months later, I remember we sold that property we bought for 99, and we sold it for 138,500. Thinking, wow, that's like a 50%. But little do I know, that was that next 12 months period where it doubled. The people who bought it off us for 138, they sold it for $295,000 12 months later. Fortunately for us, we sold that little place, and in the same market, we bought another property, so we didn't miss out. But you just don't know. You know the market's going to move, but you can't pick exactly when. If someone says they know exactly when the market's going to move, they're guessing. But one thing we do know, it moves.
Well, the thing is, I know that I've heard you say, and we've all talked about this, that if you're going to get into investing, you really should think of it as being probably like a 15-year kind of optimal period. Of course, we would like to buy in a market that's going to potentially in that 15 years actually have two growth cycles. That's the optimal thing to be able to achieve. So if a full cycle is 10 years, you might have the chance of picking up on two in that same period, but at least you're going to get one. Right? At least you're going to get that one solid growth cycle in that time, and that substantially changes, your wealth and obviously, I know for me, when I think about that whole idea of, property prices are never going to go up, the classic one for me, which I know you're familiar with, Gordon, is I bought a property in my early to mid-20s, and I remember going to the bank and it was $172,000, this property. The bank manager tried to talk me out of it. It was about the third loan I'd been for in 6 or 12 months or something, so he was trying to slow me down. And my solicitor, when I approached the solicitor, he was like, "Gosh, just feel like, he said that's a lot of money. I don't know about that." And my mum and dad thought I was crazy. Their exact words were, "Who the heck pays $172,000 for a house?"
That's
right?
a lot of money back then.
Yeah, well, for me, it was certainly the more expensive house that I'd ever purchased, but it was certainly giving us, I believed a great opportunity, or giving me a great opportunity, because of the fact that as soon as I tidied it up, it was a full ocean view property. Over the years, of course, it's worked out to be pretty good. In the short term, the best thing about when I did buy it was that same bank manager ended up becoming my tenant, which was a really good thing. The National Australia Bank actually was renting the property off me for many years, so that gentleman lived in the house, and while he was living in the house over about a 4-year period, he watched the property double in price. So I remember he called me for a long time Lucky Phil, which was a bit annoying, but at the same time, not too bad. It was a bit of a compliment. Yeah. But that property's gone on to probably double or quadruple in price, and definitely not double, triple or quadruple in price. And it's gone on to buy me a number of other properties. So now, I guess the thing for me, when you look at that whole conversation around property prices, just can't continue to go up, and investors that are sitting on the sideline trying to weigh up the pain of stepping into the market. Now I know you're seeing these investors every day, Gordy, stepping into the market, and you're surprised at the moment how little pain there is. Just so for listeners that aren't familiar with your role, you're a property coach, you're a property investment advisor. You work as a strategist to help people come up with the right strategy to go, what are you looking to achieve, and where are you at now? Where would you like to be, and help them map the way towards where they would be able to square peg, square hole, put the right properties in their portfolio. Then someone like Trent is a very important resource for me and for Invest Approved to be able to apply the screening processes that I would expect before a property became Invest Approved. But Trent would be the bespoke service that would go out, walk the land, screen the developers to make sure that that those screening processes are adhered to and a property is approved and match up with your client's strategy. So I know the pain factor, there's not much of it at the moment.
No, it isn't. It isn't. And it's, as you know, I'm a lifestyle kind of guy. I like to enjoy life, and so when I'm dealing with my clients, the investors, that's my focus for them, is that I don't want to get them into a situation where their lifestyle gets affected negatively. I want for them an experience that is just a great experience. And for me, a great experience as an investor is you virtually don't even know that you're doing it.
Uh-huh.
All you know is that every month, your income's coming in. When we set our investors up, we have them working with the right consultants, the property managers who will, pay the rates for them. They'll pay all the expenses for them. They'll get an email at the end of the month that just says what's happened. Now, they don't have to do anything. But at the moment, it's interest rates the way they are, yields the way they are. It's just a great time. It's a great environment to be a property investor at the moment. That doesn't mean you just go out and throw a dart on the map and go, well, I'm going to buy there. You still got to be smart, and that's where as you say, Trent comes in. But it's not that hard. You just get a few of those little things right, and it's a great experience. Experience.
I don't know that we've ever seen a better time to build wealth with interest rates being so low. The markets that are the hottest markets have got great yields. It's an unusual mix of elements,
Yeah, it is. It's an opportunity to potentially buy into markets where you're going to get good capital growth and good yield, and they should only grow in the short to medium term. So, there is danger sometimes in forecasting in the crystal ball or ball stuff, as far as buy this property today and you're going to make $100,000 in capital uplift within 6 months. There is a danger of that, but I must say there's a lot of different factors that are pointing towards some of the markets we're in of that exactly happening.
Yeah, there is.
I was one of the estates that I really like. It's the first stage is 32 lots, high owner occupier. Of the first 12 or so houses that have been finished, 3 of those are going to be investment properties. Each one of those properties have had 50 applications for tenants. So it's a interesting time. Really interesting.
Supply levels are so low, demand's so high. The investors are only now starting to get really back into the market. That door's opening.
Yeah.
That's only going to add another volume and another, supply to demand ratio that's going to really favour an uplift in property prices over the coming years. It's a very unique window in the market. Now, of course, one of the big things is going to be how do you pay the right price? Because when you're talking about a national property market, and when you're looking at our model is how do you effectively navigate the national property market. One of the things we all know is that every market that you go into, you can't pretend to be an expert. You need to know, how to navigate safely and effectively using the resources that you can rely on to keep you safe. And a big part of stepping into the market safely is paying the right price for that property. So the key topic we're going to talk about today is to help the listeners understand the mechanisms that we've created to make sure that in every market we move into, we pay the right price for the property every time. Now, with us or without us, it's a great thing to learn. It's a great, realisation that we now have, and something we use very, very effectively as we go into each of the markets. But before we cover off on that point, I want to cross over and have a talk to, one of the agents, one of the real estate agents in one of the fastest growing. I know it's one of the fastest growing population growth areas in Australia, but I think it's a pretty exciting area, and it may have one of my favourite estates in this particular market. Well, let's cross over and have a talk to Denny, and we'll find out what's going on in the streets in his area.
Yeah.
So like we do each week, we're going to cross over to the streets of Australia. We're going to drop down into one of the key postcodes around Australia and have a look at what's really going on the ground. Now, we're lucky enough to be joined by the principal of LJ Hooker up in Redcliffe. Now, Redcliffe is in the heart of Moreton Bay, and it's a pretty exciting segment of Australia. It's one of the fastest population growth areas in Australia. And the gentleman that's just joining us online, Mr. Denny Mailer, is well known to that area and is award-winning agent and one of the gentlemen that I hand-selected on the back of having chats with LJ Hooker Corporate, actually. I was talking to the gentleman internally in LJ Hooker, and they said this is one guy that would really get the investor-approved model. He's a genuine bloke. He likes to, really protect his clients. He's got a very caring nature, and now that I've gotten to know him, I can see exactly what they're saying. Thanks for joining us, Danny.
Thanks for having us, mate. Nice to have a talk.
Yeah, good on you, champ. Now, I know that you had a chat to Gordy. We kind of been doing the little intros, and now that we're kind of linking arms a bit and trying to help the investors in your office or from your database navigate around Australia, we've been having more and more communications, but the reality is that you and Gordy share a bit of a background as well, mate, both the aviation industry. You were a former Qantas Link captain. I could see you in that role, mate.
Okay, no, that's good. Haven't flown since 2012, but yeah, did that for 15 years.
There hasn't been many people flying lately at any rate, mate.
No, that's right. It's probably a good time to get out of the industry.
How long did you do that for?
Yeah, it's 15, just over 15 years, yeah.
Wow. Yeah, that's cool. And so how long have you been in real estate? Were you doing real estate during that time, or has it just been since you retired your captain's hat?
No, we started doing real estate in 2003, and I shortly after that dropped down to part-time in aviation, and then the business just went from strength to strength. So basically left that to concentrate 100% on the company.
Now, I got a little bit confused, Danny, because of the fact that I know, like I said, you've won a lot of awards. You're really well known. Particularly, I guess it'd be in the way that you market and sell homes for people. You must be strong in that part of the market. But I noticed that some of your awards weren't just Queensland. There was a Northern Territory. So is that just the way that the award, I guess, placement is, or were you in that market as well for some time?
No, the award placement, it was Brisbane North. It spread right up through Queensland and Northern Territory. Yeah.
Oh, okay. Yeah, I got a little confused there when I saw the, the information the corporate was sharing with me. I kind of went, I wonder if you had some time up in that area. So you do know that area. Is that kind of, how long have you been in that segment of the market?
We started the agency in 2003, but my wife was in it before that since 99. So, but our company's been going 18 years. She's been in it now 21. So,
oh, wow.
Yeah, we've been here a while.
Mate, you've seen some changes in that time, hey?
Made huge changes in the area and huge growth now. So, it's chalk and cheese to where we started, that's for sure.
Yeah, it's such a talked about area for population growth. What do you think drives that, Danny? Do you think it's the affordability of the local market or the jobs that are being created, or what do you think it is, a combination?
It's a combination. This place has been growth-wise and a fair bit of money invested with council. The peninsula is kind of hard to get to through city and that, where they've done train lines and bridges and all of that to help that. It's just been a constant area of growth since I've been here.
Yeah. And how did you find COVID? Now, COVID was the craziest. Obviously, this year's been an unusual year. How's it been on the ground for you, mate? How have you navigated that?
Mate, the start of COVID was, our inquiry didn't stop. Our inquiry actually went higher, and I think there was a lockdowns was included in that. There a bit of confidence in the market where there was no commitment from buyers to start with, and that probably went pretty much until when Queensland was released from the lockdowns, and then from week to week we've just multiple offers on every property. It's, I was a high auction seller where I haven't been doing that because time frame is a factor. Basically put a property on the market and you've got 3 or 4 offers within the first couple of days, and that competition's driving prices like an auction would anyway, so it's not needed.
Yeah, so obviously more buyers and sellers, and I know your strength is the listings and the auctions, but just getting your hands on the stock, mate, is that the issue?
I'd say a stock's coming on like it would be at this time of any year. Look, it'd be nice to have 5 times the amount because we've got 5 times the buyers and we'd be making 5 times the sales. So, but that is driving price and it's driving this area's housing market. It's good.
Yeah, so we are hearing that it's a huge ripple coming out of the southern states, people rolling out of Sydney and Melbourne. Are you seeing that firsthand? Is that where a lot of the inquiries coming from?
Borders opened yesterday, we did. Tuesday, but yeah, we've seen a lot of inquiry last week. That was, I'm up there next week. Can I see this house? Pre-opening of the borders, I've had a lot of inquiry. Few sight unseen sales, but a lot of people want to see the product before they purchase. I've got a holiday properties that I sell as well on one of the islands up here. Pre-COVID, I couldn't sell those for 5 years. I've just sold 3 of those.
Wow.
And these were properties that were sitting on the market for a long time due to high fees of a resort. But that's been locals buying that, so there's plenty of money in town still.
Yeah, it's funny. As I talk to different people in different areas, the locals are also, I guess, feeling quite confident, knowing that there's movement, knowing that, I guess there's a feeling of population flowing into the area, so they're acting before it's too late as well.
Yeah, I've spoken to a couple of businesses, mate. There was when COVID first got locked down, boat sales went through the roof because people could fish for food as they used to do. That's how they got out in Queensland. The boat shop that I deal with, he kind of said that slowed down, and I deal with a couple of caravan mobs that they can't get caravans till next year. So this lockdown of the state and holiday in the state thing, I think the locals are just buying products that can, whether it be holiday homes, caravans and all of that, where they can trip around the state and still have a holiday rather than overseas or in the state.
And from your location, mate, there's some pretty amazing places. Within a 2 or 3 hour drive, there's a lot of area to explore and some beautiful, coastal regions and so forth.
And Queensland's a big state, mate. Like it's when I used to fly, mate, you'd go 4 hours north and you'd still be in Queensland, 4 hours south. You cross 2 states and a territory. So it's a big area.
Yeah, no, it is. It's a massive state when you think about it like that. So how's it been as far as, the rental market? How have you found it through COVID and how is it at the moment?
Rental market's the same, mate. I've got pretty much as soon as a property comes on the market or is available in the future with the tenant moving out, we've got multiple applications on it. So investors have been able to choose the best ones of those, and the quality of tenant is going through the roof too. So it's good. It's similar to the sales market.
Yeah, so mate, that's one of the exciting things for us, and that was where our conversations originally started because, we're obviously, serving the landlord and looking to lock arms with the best property management teams, and your team is, got a very, very strong reputation for being very comprehensive and thorough in that department. Do you see, there must be a different sort of stock and so forth through your market from, mate, I'm an absolute fan of, as you know, I'm a fan of the Newport estate. That's just like such an amazing waterfront estate. And obviously your market would stretch inland to a whole range of different, sort of stock types and appeal to different people. It's all feeling good. How do you, do you feel as passionate as I do about that Newport estate? Do you like that area?
Mate, it's a good estate, that's for sure. We've got a diverse section of what we sell and rent. From $200,000 properties to $2 million properties. It's a very wide range. The Newport estate is good. It's good for investors. It's low maintenance, good property return, and a really good neighbourhood.
Yeah, it's great.
Just on, I've got a question there, just with the Redcliffe Peninsula there, Danny. Is it has the time come yet where you're seeing if you knock down rebuilds, split lots, that type of activity through the peninsula?
They pretty much started just after the Stocklands estate opened.
Yep.
Like it's. I deal with a builder that just sold him one the other day. It's about to settle. He's got the demolitions booked in. Sent me the plans for the new one. Sent me the prices, and we'll start advertising on settlement. So yes is the answer to that.
That's
There's
the
plenty
answer,
of new builds
yeah.
happening.
Yeah, no, look, I've looked at the market for years, and I know you've seen some constant growth over the 20 odd years you've been there. But I was interested to see when the train line came in. You mentioned earlier with the infrastructure, and one of our big things we look for is obviously infrastructure and access to the capital cities. And the train line for Kippering, do you feel is there a big commute portion of the Redcliffe people that commute to the city for work? And did you see an effect with that train line or the train station opening up in Kippering?
Look, there is a lot of people that work in the city, but there's a lot of people that are off the peninsula that work on the peninsula, that are on the peninsula that work, off the peninsula. There's industry around here. There's commercial. It's a wide range of where people work. The train line did make a big effect on prices though, and a lot of investors came to here because of the access.
Yeah, okay.
It seemed to really connect. Obviously, that was a big factor, one of the big infrastructure changes that connected. But I'm hearing there's a new university now in not too far from the new campus. There's so many things happening in that area. You can see why the population's growing so strongly. It's obviously going from being a very affordable area to soon being pretty much a coastal area that,
it's got a beautiful feel until you drive through the whole region of I'm calling it the Redcliffe Peninsula, mate. But you've got high density, but it's got a really coastal feel, and you're surrounded by water, right?
Yeah.
So there's parks all the way through. I know the area quite well because my in-laws are there. So
right.
I'm up there, I guess a couple of times a year. But I'm also visiting Newport and dealing with dealers through the new estate there. But their sales rate's gone through the roof, and as you say, it's interesting how you can potentially invest in a $600,000 house and land and be within 100 metres of a $3 million house on the water.
Yeah, bizarre.
Yeah.
Right.
So it's one thing we should mention too is potentially a second NRL team. You guys are having a good punt at
the Dolphins.
Yeah, the Redcliffe Club, which is a current feeder club for the Broncos. Is that right?
Yeah, I believe so. Yeah, that's right.
Yeah. So they're talking about $100 million investment into a new club there, which would be great for the region.
Yeah, well, there's definitely plenty going on in that area. Definitely plenty going on. Well, look, mate, it's great to say good day. Thanks for giving us a little bit of an update on the ground. I know that, like I said, the thing that's of huge importance to us is the strength of your property investment team. So thank you for helping us out and helping protect our our landlords going into that market and taking really good care of them. Looking forward to doing some presentations and giving your database a bit of a quarterly update on the national market. Thanks for kind of sharing my vision on protecting investors and giving them some frank and clear advice on, at least our perspectives on everything that's happening across the nation and trying to protect as many investors as possible. Great to have you on board, mate.
All right, mate. A pleasure. It's good to do. It's good to be here.
Good on you, pal. All right, we'll cross over again another day soon, mate. But take care, and we'll talk again.
All right,
Danny.
Talk to you
Thanks,
soon.
Danny.
Mate.
All the best, Danny.
Bye.
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 What a great market that market is. It's certainly moving along. We can feel that hum, and I know that I'm really excited about that Newport estate. I think it's one of the... If you walk through that estate, it's kind of breathtaking. You sit down, you can't believe yourself when you're sitting there having a coffee, looking at the infrastructure, the parks, the little cafe, and that whole lifestyle that's there now with that easy commute back into the city. It's pretty special.
Yeah, it is. It is. All those feelings is only going to drive demand, because the desire to live in there, one as an owner-occupier, but two as a tenant, and it'll be done in 18 months' time, meaning, the Redcliffe Peninsula is a peninsula and it's landlocked. So once it's built out, that's it. There's no more.
Yeah,
so the desire there is, it's going to be. It's up there in the top 3 for me in the country right now.
Uh-huh.
With that being said, it's very hard to get a block in there. It's a ballot system. We've been able to still secure through our relationships with builders and the developer Stockland. But it's tough to get into. It's only going to get tougher.
Yeah, I can imagine why. I can imagine why.
Yeah.
Look, I know that there's going to be some listeners. I'm excited to be working with Danny and his database, his clients, and providing a quarterly update, a very, very genuine look at what's going on across the nation through the eyes of investors, and the changes, the shifts, all those things that are happening, and how investors can profit. I'm very much looking forward to presenting those quarterly, investor evenings or investor updates. For the listeners that are listening in now and wondering how they'll get access to that same information, don't worry, we'll be sharing those quarterly updates with all the people that are following our content. But I am really excited. Denny is one heck of an operator. I know he's a quiet gentleman, but his property management team provide an unbelievable service. Like the follow up, their attention to detail. As a landlord, that's exactly what you want. None of us want an extra job, right? So having the property management team being so good and comprehensive in the way they look after your properties, it takes away a big chunk of stress and worry. Guys, let's get into the topic for today. We need to solve a problem. We need to really solve address that piece of the puzzle that we promised we'd be addressing, and that's how do you pay the right price every single time when you buy a property. Now, this was a challenge for me as I built a national portfolio, walking into markets and trying to understand how we would navigate that space, how you would learn, how to pay the right price. Unfortunately, the real estate agent, they serve and look after the seller. That's their job, to get the most they can for the seller. That's the real estate agent's job. Of course, when you deal in the local market and ask people, everyone's got a different idea. If you're talking to locals, they all think their properties are worth more than what they maybe are worth. That's just a inherent thing, every community we go into. But we've worked it out. Now, what we've come up with is, and we've proven this to be an incredibly successful way to pay the right price for a property every time. Now, for the listeners that are tuned in, with us or without us, please use this system, because this is the most effective way that you can go into a market and absolutely know that the contract price is the right price. And what we do, this is what we do. We go in early. Of course, in future podcasts, we'll talk about how do we target the right property, how do we know what would be the right property for that market. There's lots of other parts of the puzzle, but once we know what we're targeting, we would get an independent bank panel valuer to do a valuation on that property. Now, typically, we found that valuer would be probably a little bit off the market price for the property, a little bit in favour of the buyer, not the seller, because valuers look backwards. They don't look forwards. They look backwards. They look at proof of sales, etc., etc. And we use that formula, and this is a great formula as a buyer. If you're going to buy a property, don't take the developer's price or the real estate agent's price or the vendor's price. Get an independent bank panel valuer to tell you what they see the value of that property being, and then aim at that being the purchase price. Now, of course, this is something we've done very effectively, but I know you take it even a step further, Trent. You got any comments?
Yeah, well, a lot of it's got to do with the build contract. I pull that apart and make it give a brief for the conveyancer for the buyer. I make sure that terms within the contracts are really fixed price. I have a big list of special conditions that go into contracts, and typically most builders won't agree to those terms. That's why we only deal with the builders we've got relationships with. And what it means is that the properties have to be built within a certain time frame, and if they're not, the buyer is subsidised either through what we call liquidated damages, meaning that if it's not completed, they would receive the amount of the rent equal to the liquidated damages is equal to the lost rent, and also ensuring that the specifications and the quality of the build is as per what's been promised up front.
Yeah.
I probably now take it for granted because I'm dealing with builders that we can trust. We've done potentially hundreds and hundreds of properties. It's long-term relationships that the people we deal with. So now I probably take it for granted what we actually get put into contracts and the quality of builds we get done.
But you're not just paying the right price, setting that as you make sure that price is fixed, making sure that if the building is delayed, the construction period is delayed, that cost doesn't blow out for the purchaser. It sits on the developer's shoulders. When they get to the end, there's not another cent to pay, that it's turnkeyed and it's ready to go. The window dressings are in, the antennas on the roof facing in the right direction. You're basically turnkeying that process in the initial conversation with the developer and making sure that it all hinges off the purchaser paying the right price. Now, for those people that are new to this, sorry mate,
Yeah, well, it's probably worth, we had Danny on the phone and on the call, and it's probably worth saying, identifying that we start with the property manager as well. Yeah. You've been big with this, Phil, over your history through property, but it does start with the property manager and understanding what does that market need as far as what a tenant's looking for. They're looking for a 3-bedroom, single car garage, or is it that, or does that estate and market need a 4-bedroom, double bath, double living area? Is it a family? What access do they need to amenity? And those questions come directly from the property manager. So then when we obviously look to secure the land and then go to the builder to package it up, we've got those answers for the builders, and we're cross-checking with their plans and their pricing to understand, okay, that fits that market. So it starts a long way back, I guess, even before we get to contract stage and making sure it's a foolproof contract. Lawyers and solicitors, conveyancers are saying we haven't seen these terms before in contracts. It's we don't feel like the builder will agree to them.
Well, this comes down to the whole history of, everything in the market, the history of where we are to date in the Australian real estate market is that the big driver to change has been driven via the seller, right? So the agents and the developers and all those people that, earn income out of the real estate industry have all continued to improve the mechanisms and the focus on protecting the seller, but there's never really been in the Australian market compared to the American market. In the American market, there's always someone on the buyer's side, always someone on the seller's side. Having buyers, agents and so forth on the buyer's side in Australia is a very new thing. There's very few people can do that, and there's very few people that actually know much more than just their local suburb and potentially even just a one-part contract, a traditional existing home contract. So there's a lot of room on the side of serving and protecting the buyer that's yet to be put in place in Australia, which is why I'm so passionate to go, I need to pull on what what Trent knows, what all these people around us, great brokers, great agents, great property managers, all of these people, great proven developers with real values and ethics and long-term focus, as well as valuers and a whole range of people when you go top to tail of this and come up with a system, because most people are just too time poor to think about the stuff that we all now know. So to systemise it's pretty, it's a unique model, it's a unique thing, but it's very much needed. Gordy, what do you think about the whole idea of, you must see from your side, unfortunately, when you deal with so many investors and you're holding their hand, you must see people that don't understand how to pay the right price or how to do half the things that Trent does in controlling contracts. What have you seen? Lots of
Horror stories, if that's not too strong a term. Comes to mind, listeners might know, but we help people with purchasing SMSF properties. And obviously we do new properties, so a lot of those properties get built for the investor. And
just for the viewers at home,
SMSF, Self-Managed Super Fund.
Thank you, buddy.
Sorry.
Thank you.
Yeah, so people that are purchasing in their self-managed super fund, we've seen people that have entered into contracts on, apartment buildings that are, 2 years away, and they pay their 10% deposit, back when they sign the contract, the bank goes, yep, your serviceability's okay. They don't pay too much attention to the valuation at that point because it's 2 years down the track. When we get to that point, the bank does a valuation for them. And I think you know one of the stories I'm about to mention. And when it came to time for settlement, the valuation was, I think what was 140,000 below the purchase price. So that left this person in a position where, unless they could find some money to put in to make up the deposit, they couldn't proceed, and they couldn't proceed. So, in their self-managed super fund, they had to relinquish the deposit. So, that's just something we cannot allow to happen. So in the instance that we do a self-managed super fund, our investor would enter into a contract, but we make that contract subject to finance for the whole construction period. Now it's difficult to get a developer to do that because he's taken a risk by going, well, two things he's taken a risk on is one, will that person be in the same financial position they are today and even be able to get that loan, even though we get them a pre-approval today? But then the thing is, in that time, will the valuation stack up at that point? And we go, well, that's what has to happen. So when the construction's finished, the investor gets to, reapply for his finance. And at that point, the bank does its valuation. It has to stack up. If it doesn't stack up, fortunately for us, we've never had a situation where it hasn't stacked up, but we do not put our investors at any risk whatsoever.
Yeah, it's a real credit to you.
So
no one wants to risk their super fund.
We don't want to risk. You don't want to risk your own money, but your super fund is your own money. But you don't. That's the last thing we want to see happen to somebody. So on a valuation point, that's it. The other great thing about what we do and our focus is that the communities that we go into are predominantly owner occupied. So we don't get ourselves caught up in a situation where there might be like a two-tiered market kind of situation. Our investors, for years investors they were penalised for being investors. Mum and dad, owner-occupied, be buying a house, 100 metres up the road, and an investor is paying a premium for his property. That doesn't happen with us. It's where our prices are set by what an owner-occupier is paying. It's not set by a developer going, well, that's an investor, I'm going to adjust prices.
Pricing.
There's no two-tiered pricing. Yeah. It's, an investor gets to pay the same as an owner-occupier would for their property.
Yeah, well, look, we've seen it because how we get paid. We get the bank panel valuer to set the purchase price so that we protect the investor. The investor gets to pay the right price for the property, but then what we also do is we make sure that the vendor covers the costs associated with it, with everything that we do. Now, there are other models out there, other sales models out there that, may also take a payment from the developer, but because of the process that they use, unfortunately, it could also mean that when the investor purchases a property, we see it's quite common with a lot of people purchasing through some groups where the valuation will come in $40,000 out or whatever the situation is, and that's got to make things uncomfortable. It's got to make the investor go, what's going on here? It's got to be a painful scenario, but very, very common out in the market. Look, I hope that helps investors understand how simple it can be. I hope they understand that you just, when you go into a market that you don't know, don't try to figure the price out of a property. Don't try to be the guy that's going to be the expert on every market. I've never tried to be that. I know you and I have been in Perth and different markets, and I remember talking to Bob the Builder about his townhouses, and he was like, I was walking through going, man, these are really nice. And they were, I think, how much were they? Did he say? Because I know there's a difference. Was it like high 300s or was it low 400s?
No, at the time it was, it was high 300s, yeah.
Yeah, I think he said like, 395 or something. And I just remember looking at you going, wow, these are great. They're a beautiful product. But we knew the formula. We didn't know the market. We got an independent valuer to come in, and he applied a valuation, I think 365. Now it was only maybe $30,000 difference, but once we'd established that price and we were able to go back to Bob and say, mate, we'll take all 8 of them, but we're only paying 365. He was like, okay.
And Bob, we want doors on the wardrobes.
Yeah. Some funny thing goes on over in Perth, right? It's funny how the difference of each states, and there's some things you learn the longer you've been doing it. But it is a great example, and it is a great way to buy property. Make sure you use a bank panel valuer to be able to set it. Now, it's not a valuation done by a real estate agent. It's not a mate of a mate. It's an independent bank panel valuation. So look, I think that's a great message to share with the viewers, and we've got some good ones that we'll share every time we do one of these podcasts. Now, I want to answer, just before we close, I want to answer 3 questions. We've got 3 questions that I picked out this morning, guys. I'm going to fire the first one at you, Trent. Tony asked a great question. He said, do we favour areas that, or do we favour capital growth or cash flow? What is our preference? I knew you'd be a good one to handle this at the moment on the back of some conversations we've been having.
It's probably we've touched on some topics today where it's not so much we're favouring. Well, we do favour areas. I'll take that back. There's a long list of areas and properties to get onto investor proof, onto our radar. So one is yield, and one is capital growth, what's happening in the market as far as infrastructure, population growth, whole list of things. But we're in a time right now where you can get both. Unless you're going to get into a commercial property, and then we look at what's gone through COVID and the problems commercial landlords have had. We're in residential stock where we feel like there's going to be good capital growth in the near term, and you're still getting high yield. So it's a bit. Haven't seen it in the market for quite some time. It is a thing that happens in cycles. We spoke about those 10-year cycles, some being shorter, some being marginally longer. But we're in a unique position at the moment where we feel like you've got good growth supported with really good yield. An example I touched on was a newly completed property having 50 applications for tenancy. So
huge rental demand.
Yeah. So, that's instantly...
In a market that's got forecasts by the banks that are typically conservative of up to 20% growth over the next few years, it's
well,
a unique combination.
That particular market's a market where the forecast is saying 49,000 additional dwellings needed before 2031. So it's a lot of properties, right?
Yeah.
But the escalation of and the rental yields coming down to less than 1%, 0.4%, it just drives yields, and in owner-occupier estates where there's no question there's going to be capital growth,
Yeah, it's pretty exciting times. Let's have a look at number 2. Number 2 question I put down, I'll fire this one at Gordy. I thought it'd be a good one for Gordy. Is Charlie asks, with regards to some numbers you mentioned on the last podcast, actually, and I know that you mentioned an example of somebody's scenario you're working with, and I think Charlie's maybe challenging you a little bit on this one, Gordy. I think Charlie is a gentleman or a lady. I'm going to say a gentleman. I'm hopeful I've got that one right. Apologies if I don't. But I think the question is with regards to achieve those numbers, there must be a big cash deposit. They must have paid the 20% cash deposit to have been able to create that. But I know it's 100%. Just confirm those details.
Yeah, so the example I used last week, Tim and his partner, they're looking to purchase, it's their first investment property. I think I mentioned they've been following you for quite a few years, but just have been sitting on their hands, and they decided now's the time to go in. So going through the process of getting themselves buyer ready. They've done that. They are buyer ready. We've gone through the process of the strategy. What do they want to achieve? And part of that strategy they wanted to achieve was to pay down their home loan, existing home loan soon. The 20 years left to run on their home loan. Create a property that will give them enough positive cash flow to reduce the time left on that home loan. So it wasn't about them having to, dig into any savings that they might have. It was about using the equity in their home, which they've been paying off now for some 10 years, 20 years left to go on the home loan. So 100% borrowing of the purchase price of the property, the purchase costs of the property, including stamp duty, legal fees, the ongoing costs of the property, the rates, the any maintenance, the property management fees, all those costs are included. And with a property that they've purchased in a remarkable location, is going to give them $232 a week cash flow positive, based on obviously current interest rates that we've got and an interest only investment loan. And the focus is to pay down that principal and interest non-tax deductible home loan. The interesting thing is that, of that $232 a week positive cash flow, they're using very little at the moment of the tax affordability. That home, before tax affordability, is cash flow positive. It's not totally dependent on the tax deductions they're getting. There is tax deductibility in there, but only a small portion, which I think is great at the moment, because I think we're going to see this environment of interest rates for probably the next 3 to 5 years where it's at.
At least.
But the beauty is that if you're smart and you can get the property doing most of the work on its own, then you leave yourself quite a big chunk of tax affordability later on. As interest rates start to move a little bit, there's going to be scope to just use more of your tax towards paying that down. So it'd be very easy at the moment to get carried away and buy in a market where, the yields aren't quite so good, going, hey, the interest rates are low, I can do it.
Yeah.
But you leave yourself open to not a real good experience later on if interest rates turn around a little bit. So
I'm glad you touched on that, because it is a little bit of a advantage that we have in the market, but I don't think we want to take that lightly. We want to use it for all the advantage that it can be. So I think it's a really, really strong point. Look, the last question that I was going to address myself was with regards to what effect we saw the fact that our international borders are closed. We don't have immigration topping up our population base here in Australia, and what effect we thought that'd have on the Australian property markets. And I love my research, so this is right in my little pocket, so I thought I'd take this one on. One of the things that I would say that we didn't, it's interesting, as the analysts forecast the impact of a whole range of things throughout national property markets through COVID-19, we very quickly learned that there's another analyst following something else that actually combats or changes the way that you may feel about just one element and one story within something to do with the property market and what could cause a problem or a benefit. In this case, the immigration numbers, of course, with the borders cut off, we're not bringing in new migrants into Australia, but what they didn't allow for was how many expats living overseas would be returning home. Now, the numbers, I've been watching the numbers, and there's just on 500,000 expats that have returned home. There's still 1 million more expats overseas that are, potentially returning home. I know there's, tens of thousands that have got applications lodged to move back home, and they've exceeded the annual population growth that would have been experienced by the immigration of people from moving from other countries. And outside of that, now there's new research suggesting, and this is not research from property, people are going to benefit from property. This is research from the Reserve Bank of Australia and those sorts of people that are now looking at where Australia was already positioned as the favoured nation in the world for high net wealth individuals to migrate to. We were the number one country. We didn't have the tap on very much, but that popularity is looking to explode on the back end of COVID. The people that would normally migrate to America or into Europe or wherever they would, they'd spend their retirement years, or if they're wealthy business owners and they get to choose where they'd like to live, and they look at what country they want to, call their home, Australia they're really forecasting Australia's popularity is going to go through the roof, given our, COVID, our safe Australia sort of reputation, our AAA, credit ratings and the surety around so many aspects here in the Australian markets with the medical, sort of facilities, our healthcare system, etc. Look, I think, one, immigration is certainly not been something that's hurting us at the moment. We've got more expats coming back than we would have had people migrating to Australia, and we've still got a lot more to come. And when those international borders open, I think it's going to be game on. And if Australia needs to turn the tap on a little bit just to let in some wealthy migrants, of course they've got to control that tap, because if they turn it on too far, as we've discussed, Trent, it pushes up the property prices, But like I said, very, very interesting times. Look, guys, thanks for joining me today. That's been another great chat. Next week, we're absolutely going to drill down, and the part of the puzzle that we're going to focus on next week will be how to select the right property every single time. How do you go into the market? What are those questions you ask? What do you do on the ground? How do you know what's the right property to buy? Because you should put away your own emotions and your own personal taste, and you should be focused on what's going to be the safest, the most productive, the most rentable, the most productive, investment property in that market. So we're going to, give you a good, clear outline on how to target the right property every single time. So thank you, gentlemen, for joining me. Always nice to catch up.
A pleasure.
Good on you, Phil.
Good on you.
Pleasure.
And thank you, listeners and viewers all over Australia. This has been Street Smart Property Investing. Talk again real soon.
Catch you soon.
Thank you.
Thanks for watching, guys. Don't forget to subscribe. Feel free to leave a question below. I look forward to helping you with all of your needs around property. Take care, and we'll talk soon.